Okay, let's dive right in. SentinelOne just dropped their Q2 FY2026 results, and there's a lot to unpack, especially how they're riding this AI wave.
Right, and the big question for you, our listener, was how would they measure up against expectations? We're looking at their financial health, where they're headed.
So the headlines first. SentinelOne, that's NASDAQ, ticker S. They definitely put on a strong showing for Q2 ending July 31st. They beat expectations pretty decisively.
Yeah, and they did.
Earnings per share came in at 0.04 cents. Analysts were only forecasting 0.03 cents.
That's a big beat.
It is a 33.33% positive surprise, and it continues a trend we've seen from them.
And that consistency, it tells you something about their operational management. There's strong demand there.
Right. And revenue, it was a slight beat, but still positive.
Yeah.
$242.18 million against the anticipated $242.16 million.
That squeaked by on revenue, yeah.
Yeah.
But still, that represents a solid 22% year-over-year increase.
Still very healthy growth.
Very healthy. Right. And pairing that slight revenue beat with the strong EPS beat, that tells you they're getting really efficient, turning sales into actual earnings.
Good point. And the market reaction. Stock was up, 2.68% after the announcement, closed at $17.15, and kept rising a bit after hours.
It did, yeah, up to $17.30 after hours. A positive reaction for sure.
But, for a company hitting $1 billion in ARR, pushing hard on AI, does that bump feel a bit, muted? Or is the market just being cautious?
That's a fair question. The immediate bump is nice, but maybe the bigger story is that ARR number itself. Annualized recurring revenue grew 24% year over year.
And officially crossed the $1 billion mark.
Exactly. That is a huge milestone. It's not just a number, it fundamentally repositions them. For you as an investor, it signals a real long-term moat.
So what does hitting that kind of ARR tell us about who their customers are? Are they getting bigger clients?
Absolutely. That's a key part of this. They saw a 23% jump in customers who generate $100,000 or more in ARR. They're up to 1,513 of those larger clients now. So it's not just getting more customers, it's getting deeper relationships, higher value, record high ARR per customer.
So they're expanding within existing accounts too, landing and expanding.
Precisely. That stickiness is crucial. It shows the platform has strategic value.
Okay, growth is strong, customer value is up. But the big question, especially for tech these days, are they making money?
Right. And the answer this quarter seems to be a definite yes, a real shift towards profitability.
Let's look at those non-GAAP margins then. You mentioned they filter out some non-cash items.
Exactly. Gives you a clearer view of core business performance. Non-GAAP gross margins stayed strong at 79%, just a tick down from 80% last year, but still excellent.
Very strong.
But the big story is operating margin. Non-GAAP operating margin went from -3% last year to +2% this quarter.
Wow, that's a significant swing.
Huge swing. It means they're generating profit from their day-to-day operations now. And non-GAAP net income margin hit 5%, up from 2% last year.
And that's the 5th consecutive quarter of positive net income margin, right?
5th straight quarter. So it shows a clear path towards sustainable profitability. They're moving past that growth at any cost phase.
Growing and profitable. Plus, they've got a strong balance sheet, right? Over $1 billion in cash.
Yeah, $1.2 billion in cash, more cash than debt. That gives them incredible flexibility for R&D, for acquisitions, or just weathering storms.
Okay, so Q2 looks great. Strong performance, profitability improving. But what about the road ahead? What's the forecast look like?
Well, building on that Q2 momentum, they raised their full-year guidance for fiscal 26. They're now projecting revenue between $998 million and $1.02 billion.
So the midpoint is right around that $1 billion mark.
Exactly, which still represents about 22% year-over-year growth for the full year.
And for Q3 specifically?
For Q3, they're expecting revenue of $256 million. That's also 22% year-over-year growth. They're guiding for a non-GAAP gross margin of 78.5%. and a non-GAAP operating margin of 4%.
So continued margin improvement expected in Q3.
That's the plan. And critically, they reaffirm their commitment to deliver positive free cash flow for the entire fiscal year.
Positive free cash flow for the full year. That's a big commitment.
It is. It means they expect to generate more cash than they spend over the whole year. A very strong signal of financial health.
Okay, so guidance is up, margins improving, committed to free cash flow. It all sounds really positive. But I did catch that phrase from the CFO, Barbara Larson, prudent assumptions for the second half. Why? The caution, given the strong results.
That's a sharp observation. It shows they're being realistic. They specifically mention factors like deal timing, overall macro, and federal.
Okay, so what does that break down to?
Well, deal timing just acknowledges that large enterprise or government contracts can be lumpy. Sales cycles can stretch out.
Hmm.
Overall macro points to the broader economy, inflation, interest rates, general business caution, potentially delaying some spending.
Makes sense.
And federal relates specifically to government deals, which have their own unique cycles and budget constraints. So even with a strong pipeline, they're acknowledging potential bumps in the road. It's responsible forecasting.
Got it. Now, let's shift gears a bit to the strategy, especially AI. Tomer Weingarten, the CEO, said AI makes security more critical than ever. How are they actually putting that into practice? This feels like the core of their story right now.
Absolutely. It's not just talk. AI is deeply embedded. Take Purple AI, their generative AI security assistant.
Right, I saw that mentioned.
It's seeing triple-digit growth. Attach rates are over 30% of licenses sold now. And those IDC study numbers are pretty stunning.
Yeah, what were they again?
55% faster threat remediation, 60% lower chance of major incident, and get this, a 338% ROI over 3 years for users.
Wow. That's tangible value. That translates directly into saving money and preventing serious damage for businesses.
Exactly. It shifts security from just being a cost center towards being an efficiency driver, making security teams way more effective.
So that's AI improving security operations. Are they also working on security for AI itself?
Yes, and that's where the Prompt Security acquisition comes in. They spent about $180 million on that.
Okay, what does prompt security do?
It focuses on securing generative AI while it's running, preventing data leaks into public models, securing AI agents, basically addressing the new risks that come with widespread AI adoption.
So as companies use more tools like ChatGPT or internal AI, this helps lock that down.
Precisely. It enhances visibility and control over how Gen AI is used, and it's a natural fit for their Singularity platform. It also potentially opens doors for them in the data loss prevention or DLP market.
Interesting strategic expansion there. I also saw something about SentinelOne Flex, a new licensing model.
Yeah, Flex is their unified flexible licensing model.
Right.
Think about how complex security stacks can get for customers.
Definitely. Tool sprawl is a huge issue.
Right. Flex gives customers more agility. They can adjust usage, add new products more easily, streamline procurement. If your cloud usage suddenly spikes, you can shift licenses without a huge hassle.
Sounds like something customers would appreciate.
Apparently so. They said it's already generated an 8-figure total deal value.
Uh-huh.
So, strong initial reception, suggesting it meets a real need for adaptability.
And all these pieces, the AI, the platform, the flexible licensing, seems to be driving a shift in their business, right? Almost half their bookings are now from non-endpoint stuff.
That's a huge indicator. Almost 50% of Q2 bookings came from areas like data, AI, and cloud security. It shows they're successfully becoming a true platform company, not just an endpoint vendor.
Do they have examples of that?
They highlighted a few. A global media company consolidating their security onto the Singularity platform. An iconic luxury brand using their AI that's the security information and event management tool, kind of the central brain.
Right, pulling all the logs together.
Exactly. And adding AI makes it predictive and automated. And a Fortune 50 company using Singularity Cloud for tens of thousands of cloud workloads, citing the AI and automation.
So real-world examples of the platform strategy working across different industries and needs.
Definitely. And it's backed up by industry recognition, too.
Right, the Gartner Magic Quadrant.
Yep. Leader in the EPP Magic Quadrant for the 5th year running. Top performer in the Frost Radar, too. And those IMIRE, ATT, and CK evaluation results.
What did those show?
100% detection accuracy, 100% technique coverage, 100% real-time detection, and 88% less noise compared to others.
Less noise meaning fewer false alarms for security teams to chase.
Exactly. That's huge for efficiency. It's independent validation that their tech is effective against real-world attacks.
Okay, so the picture is overwhelmingly positive. Strong growth, profitability, AI leadership, platform traction, but no company is without risks. What are the potential headwinds we should consider? Competition must be fierce.
Incredibly fierce. You've got giants like Microsoft, CrowdStrike, plus tons of innovative smaller players. It's a constant battle to differentiate, stay ahead, and maintain pricing power. That puts pressure on margins.
And the technology changes so fast in security.
Relentlessly. Threats evolve. Defenses have to evolve faster. That means massive, continuous R&D investment is non-negotiable. If they stumble, someone else will leapfrog them.
What about broader factors? The economy, global issues.
Definitely relevant. Economic uncertainty can always make businesses scrutinize budgets, even for security. That could slow down those big deals. And being global means exposure to geopolitical risks, trade issues, regulations.
And integrating acquisitions like prompt security isn't always smooth sailing either.
No, it's tough. Merging tech, teams, culture. It takes time and effort and can cause temporary disruptions. These are all real challenges you have to factor in.
So definite challenges to navigate. But despite that, their core vision seems very focused. Defining AI-native cybersecurity. It feels like they've been building towards this.
I agree. It's not a sudden pivot. AI has been central to their Singularity platform from the start. They're right at that critical intersection of AI, data, and security.
And that message, AI's promise, cannot be realized without security. That really resonates as AI becomes more embedded everywhere.
It makes their role fundamental, doesn't it? They're not just protecting systems from AI threats,
Yeah.
but enabling the safe use of AI itself. That's crucial for the next wave of tech.
So wrapping this up, if you're watching the cybersecurity space, SentinelOne is undeniably a key player making aggressive moves, really leveraging AI within a broadening platform strategy. It's a fascinating case study in trying to stay ahead in this incredibly fast-moving threat landscape.
It really is. And it leaves us with a big question for the future, doesn't it? As AI permeates everything, how do companies like SentinelOne keep innovating? Not just to react and protect, but to proactively enable secure technological progress. Balancing that speed of innovation with the absolute need for robust security. That's the tightrope they have to walk.
A crucial balancing act indeed, something for all of us to think about. Thanks for joining us on this deep dive into SentinelOne's latest quarter. We hope this gives you a clearer view of where they stand and the forces shaping their future. Until next time.